But let's get our entire research team now to tell us about the top 10 list of stocks that you need to watch out for. So here they are. Hi guys, morning to all of you. Anuj, what is on your radar this morning?
So, Sonia, two stocks. One is Tata Motors. That's seeing quite a bit of delivery-based selling, and for last 2 or 3 days, I mean, the last many days, it's seen a breach of some important support marks. And normally stock like Tata Motors has a sharp 20-30% correction in one go. So that's really looking quite downbeat now. I look at the delivery graph. Almost every day there's significant delivery-based selling in Tata Motors. Even for the DVR, once it broke 300, it kept seeing lower levels. So that's my first stock to watch. My second stock to watch is Dish TV. There's a lot of money which is shifting to Dish TV from a lot of other stocks. Look at that 1 month chart. It's up 33%. Most of it is because of the re-rating that took place after the numbers. And the sense you get is that there's still some more money shifting to Dish TV. Even in the F&O market, it's seen quite a bit of build-up. So that's my second stock to watch out for.
Actually, Tata Motors is falling for a reason. While you were on leave, there was a lot of pressure in the luxury market in China, because of which BMW, Daimler, Mercedes, all of them have been falling. And now analysts have started to re-rate their earnings potential on the Chinese JLR business. So I guess that's one of the key reasons.
Well, absolutely. And yeah, we have belabored that point a goodish bit, and that's showing up in the technicals. Well, the stock of the day of perhaps of the last 3 days, if you had watched CNBC TV 18 all through Sunday, we've covered this inch by inch ahead of the pack. And Nigel is going to get you a summary. I mean, the stocks Kane and Vedanta, now the merger is through, the ratio is known. Nigel, tell us, well, I'm sorry, but it has to be brief, but what is in store for Kane and Vedanta shareholders today and here on?
You know, Lata, what really came out yesterday was more or less in line with what we've been reporting. So the merger ratio was out. That was 1:1. So that was more or less on expected lines. The sweetener for the Kane India shareholders would be some preference shares as well, would be allotted. Just to give you brief details, the share base of Vedanta Limited will be diluted by a good 20%, and the promoter holding over there will fall from around 62.9% to approximately 50%. So yet they'll be in full control of the company at around 50.1%. We were so worried about the minority shareholders, the poor Kane India shareholders. They're going to be, all their cash in their books is going to go to the consolidated entity and the likes. So think about Vedanta shareholders as well. Now suddenly they have they'll have direct, they could have a direct hit of that tax liability of around $3.3 billion that we have been talking about. So that as well should be factored in when you're talking about the Vedanta shareholders. Yes, they're getting access to Kane India's cash, but the tax liability as well could be a bit of an overhang. In terms of the debt repayments, the management yesterday clarified that this entire deal is not being done to facilitate the parent, that's Vedanta Resources debt repayment. So that as well could be a bit of a positive, given that the management is clarifying that, but your guess is as good as mine whether or not that will happen in the times to come. The ratios as well will improve for the standalone Vedanta entity. To tell you what brokerages are saying, Axis Bank, they're very positive on the stock. They have a buy. They say that this is the case for a good re-rating on Vedanta Limited. They say that now, in fact, Vedanta Limited gets access to Kane India's cash. They beta also of around $1 billion. That as well is a big positive over there. And they say that, in fact, the weightage of Vedanta Limited could go up in all these indices, given that their free float will increase, the promoter holding as well will come down. So on the back of that, they are quite positive. Credit Suisse, they maintain an outperform rating, a target price of around 250 rupees per share. While UPS, though they have a buy rating with a target price of around 210, they say that the Kane merger is a tad bit negative because the merger ratio is below what they were expecting, and they say the ratio is insufficient to offset Kane's cash, which gets diluted upon the merger. Barclays as well, they have a similar view, though they have an overweight rating on Kane India with a target price of around 275 rupees. That's a good 50% upside from current levels. They say the deal is a tad bit disappointing for Kane India's minorities, because now they'll have the overhang of the aluminium business. That's the Vedanta aluminium business. Power as well has been a bit of a drag. So though they have an overweight rating, they as well are fairly cautious. But short point being, Lata, both the stocks, they shouldn't see any kind of damage today, because there's nothing really that came that was very, very negative. So both the stocks, in fact, could move higher, because now they'll be moving in tandem as well.
All right, Nigel, thanks for that. So on Vedanta, brokerages are unanimously positive, but on Kane, some have been slightly disappointed.
Just to play devil's advocate.
Yes.
This whole, while you take the point on corporate governance and, the issue like I should be allowed to have exposure to oil stocks if I want to, I should have exposure to metal stock if I want to. At the end of the day, this this obsession with cash. What has KN India's cash done over the last 4 or 5 years?
Yes.
Even at the best of the times, KN India stock was the rank underperformer.
Yes.
So the point is that, in this case, it may well turn out to be, to sell the rumor and buy the news for KN India as well. Because at the end of the day,
the cash is being utilized.
Exactly. And for all you know, this may well turn out to be blessing in disguise. You're assuming that crude prices will again go back to $100, $120. What if crude prices go down to $30 or $40 per barrel? And you've seen what KN India's earnings have been for last 1 year or so. So this is just to play devil's advocate.
No, I take your point entirely. I mean, the cash has been just sitting doing nothing, but two negatives which will perennially plague both these stocks. Ultimately, this is also a resource stock marrying a resource stock.
Yeah.
See, normally you are considered diversified. If resource marries manufacturing, then you can say, okay, even when resources go down, manufacturing sector is pulling me up. This is resource. When commodities fall, everything falls. Today, at this point in time, aluminum and crude both are lower.
Lata, let me just come in on this, in terms of aluminium and the likes. Zinc is a big play because we're talking about a lot of
Zinc is not theirs. Zinc is not theirs. There's another shareholder there. I mean, it's yet to happen.
Lata, so KN India shareholders, they'll get Vedanta Limited. If you look at Vedanta Limited, they get most of their earnings from Hindustan Zinc. That's the subsidiary which they have 65% stake. So as a KN India shareholder, now you're going to be having Vedanta. Vedanta will have access to Hindustan Zinc.
Yes.
And zinc is going to be one of the only base metals in the next few years that could see a lot of demand contradictory to whatever's going to happen in aluminium, copper, etc. So zinc is the big play for the next
fair point. Nigel, fair point. I mean, there are times when one element in the LME basket does better than the others.
Yes.
There is that. But really, ultimately, everything is, resource. So usually they move in tandem, and corporate governance will always move in tandem for both those companies.
And let's not forget, there's another sweetener, that redeemable preference shares, which came out of nowhere, which was a big surprise. And all KN shareholders will take that with both hands. But Pragya, you're watching out for power companies, Tata Power and Reliance Infra.
That's right, Sonia. Small, but a little bit of a sentiment positive for both of these companies. Now, we understand that the Delhi Electricity Regulatory Commission has hiked the power tariffs in the Delhi regions by close to about 6%. There's a split. I'll just come to that. Now, the increase has been done by increasing the surcharge component, which is actually the power purchase cost adjustment charges. This is typically the kind of surcharge which is levied to compensate the DISCOMs for the variations that they see in the fuel prices in the market, which is one of the reasons why the companies have been knocking the doors of the regulators up until now in order to increase the tariffs. Now, the areas which are owned by Reliance Infra, which is BYPL and BRPL, those areas which are central, east, south and west districts of Delhi, they will see a hike of close to about 6%. But of course, these hikes are extremely minimal in the overall scheme of things, given the fact that the regulatory assets in Delhi stand at a mammoth, roughly about 10,000 odd crores now. As far as north and northwest districts are concerned, where Tata Power operates, there the hike will stand at roughly about 4 to 4 odd percent. So it's a 4 to 6% kind of a band which they've implemented. The hike is in effect from today, will be applicable for the next 3 quarters. The Delhi government has always been, the AAP government has been extremely critical of these kind of tariff hikes. This is entirely the domain of the DERC, as has been discussed many times, but they're still saying that they will have a review of this order. So we'll have to see how much this can stand as a test of time. In 2015, just to give a background, the DERC had laid out an 8-year plan to sort of start revising the tariffs upwards. So we'll have to see, what more comes by way of this news. Remember, the big tariff hikes in Delhi came in 2011 and 2012. After that, the years 2013, 14, 15, and now going forward have seen just about a low single-digit hike. So not a very big positive, at least on a blended basis for both of these companies.
All right, thanks a lot for that. I